people looking at things that maybe this time is different. I think they'll find out that this time isn't different. And the smart traders understand that. And the smart traders, to me, are the central banks who are increasingly standing for delivery. China is a prime example. They told us they took time off, but they didn't. They added 60 metric tons last month. They're continuing to add both gold and silver. And it's not just China. It's India. It's Saudi Arabia. It's all of the Brics nations. Everyone told me that the numbers that China purported to have were way, way off. They have not been open about how much they've purchased. In fact, they said they weren't purchasing it, and the import-export numbers coming out of London and Switzerland betrayed that rhetoric. So this is a game about who can accumulate the most without being open about it until it's time to be open about it.
Goldman Sachs predicts that central banking and U.S. interest rate cuts will cause gold to rally to a record next year. The company listed the metal among its top commodity trades for 2025 and said prices could extend gains during Donald Trump's presidency. Since 2022, China has bought more than double the amount of gold purchased by other central banks. After a 6-month break in November, the People's Bank of China began buying bullion again. Capital said gold now makes up about 5% of China's total reserves, less than the 9.3% of India's central bank. Capital and its economists believe the PBOC will allot more of its $3 trillion in reserves to the yellow metal. In his assessment, renowned expert and trader Andy Schectman underscores China's underreported gold reserves, suggesting substantial holdings by entities like the People's Liberation Army. As of mid-2024, Brics nations collectively held 5,700 tons of gold, representing 16% of global reserves. Over the past 2 decades, these reserves have grown threefold, reflecting an effort to reduce dependence on the dollar and bolster their own nation's financial stability. Based on fundamentals, Andy Schectman notes China's steady annual gold production of 300 to 500 metric tons, none of which is exported, suggesting its true reserves far exceed official figures. Schectman sees a global race to quietly stockpile gold before revealing actual holdings. While reflecting on the market, Schectman explains how bullion banks used post-Trump election euphoria to cover short positions, causing a brief drop in gold and silver prices. Gold prices went through the roof this year as central banks began to ease interest rates and demand for safe havens grew. But then Donald Trump was elected president. Since then, the U.S. dollar has stormed ahead, and the yellow metal's traditional drivers have melted away. From a record high of $2,790 in October, prices tumbled to $2,562 after Trump's election. Now we present the clips of Andy Schectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
It was a situation where I think there was a lot of selling by the bullion banks who took advantage of the euphoria surrounding the Trump election. You had these bullion banks that were getting hammered on their short positions. You had a lot of accumulated gains by the managed money, and the risk on Trump euphoria that came along with his victory provided an opportunity, I think, for these banks to kind of square their balance sheet, so to speak, pushing the ball down the hill. And we saw gold fall off by $200, silver fall off by $3 or more. And you look at the amount of short covering that we saw by the commercial banks, it was very, very significant. And here we are, 6 weeks later, and the price has recaptured the majority of what it fell. This was, I think, to be expected. It doesn't change anything in terms of the ultimate outlook for gold and silver, but it certainly has redirected some rhetoric and some thought that this is transitioning from a risk-off position to a risk-on position. And I think that will lead to what we've seen, softness in the market, selling by the institutions, and people looking at things that maybe this time is different. I think they'll find out that this time isn't different. And the smart traders understand that. And the smart traders, to me, are the central banks who are increasingly standing for delivery. China is a prime example. They told us they took time off, but they didn't. They added 60 metric tons last month. They're continuing to add both gold and silver, and it's not just China, it's India, it's Saudi Arabia, it's all of the Brics nations. India continues to record imports in both gold and silver. So the softness that we have seen since Trump was elected, to me, was an opportunity for much of the world to continue to accumulate. At the same time, it was an opportunity for the commercial banks to alleviate some of the pressure they've had on the short side. So no, I don't think it's anything fundamentally different. It was just the market, I think, exhaling and using that opportunity to do so. The PBOC is supposed to report gold imports, right? And I would argue that the PLA, the People's Liberation Army, has as much or more than the PBOC does, and they do not report to the IMF. If gold is purchased by a proxy bank, a commercial bank on behalf of the PBOC, that's not reported. And one of the very interesting developments that we've seen over the last several months in doing interviews with guys like Sean Kuhn, he's acknowledged the fact that they're seeing China fly all over Latin America, South America, and purchasing doré and concentrate directly from the miners, disintermediating the marketplace. And in doing so, it's really opaque. It has really no effect on the price in the marketplace. 78% of all the silver that China is using for industry right now is being purchased in the form of concentrate directly from these miners. And so it's a situation where, not only that, look, they've been producing between 300 and 500 metric tons for 25 years. Those numbers in and of themselves are far in excess of what they purport to have, 2,500 metric tons. Everyone told me that the numbers that China purported to have were way, way off. They would stay at 1,200 metric tons for year over year over year, never increase. So I think just like the West hasn't really audited Fort Knox or the holdings of the United States since I think 1953, I don't think it's in any of the countries' vested interest to square up exactly how much they have. And whether it be this giant new discovery they supposedly found, maybe that's an excuse for them to say a year or two from now, yeah, actually, we have what Alistair McLeod was saying. We have 38,000 metric tons, and much of it came from this new discovery. I don't know. There's a fine line between conspiracy and reality. But guys that I follow, like Alistair, 2 years ago said that state had 20 and the people had 18, which would be 5 times more than the West does. Any way you look at it, I think not only is it not in their vested interest to be forthright about what they have, I think 100%. They have not been open about how much they've purchased. In fact, they said they weren't purchasing it, and the import-export numbers coming out of London and Switzerland betrayed that rhetoric. So this is a game about who can accumulate the most without being open about it until it's time to be open about it.
According to Andy Schectman, Bitcoin and gold serve unique yet complementary roles. He describes Bitcoin as a speculative tool for wealth creation, while gold remains a time-tested store of value. Concurrently, Schectman encourages reinvesting cryptocurrency profits into gold and silver, aligning with central banks' strategies of accumulating physical assets. According to BlackRock, the coming year will be driven by geopolitical fragmentation, competing trade blocs, and de-dollarization. And in order to navigate this new world successfully, investors will need to leverage diversifiers like gold and Bitcoin. With Bitcoin expected to continue rising for the next 4+ years, until at least 2028, and gold benefiting from inflationary pressures and global uncertainties, the stage is set for substantial opportunities in both markets. Moving forward, Schectman further highlights proposals like gold revaluation to stabilize financial systems, envisioning a future where gold anchors a new monetary order and Bitcoin plays a strategic asset role. Let's get back to the interview.
Am I a Bitcoin supporter? No. Am I a Bitcoin enthusiast? No. But I do believe that our two camps should be complementary to one another. They should not be divisive, and they should not be at each other's throats. We should not be divisive. In fact, I would argue that in many respects, we understand the problem that is of fiscal irresponsibility and brain-dead monetary policy and a government that has really gone astray in managing the world reserve currency. On the other hand, the people who buy gold and silver, I assure you, are not doing it to become wealthy. They own it because it is wealth. So I think the way that these two markets or these two groups of people can find harmony is to understand that with all of this profit, let's call it the plug your nose trade, where you may not want to be in it forever, but you understand it can change your life in some of these cryptos in terms of their ability to create wealth like that. And it's true. You look at XRP, how fast it went up in a very short period of time. Now, those who've been holding it for a long time would say we've been holding it for a long time. It didn't go up so fast, but it went up like that once it went up. That profit in something that is completely speculative and new to the world, you should take pieces of those that winning, if you will, of those winnings off and put it into gold and silver and let it sit and let your principal continue to rise and pick a number, 10%, 20%. Anytime you're above that number, pull it off
and put it into gold and silver because it is wealth that the central banks are buying. The central banks are the most knowledgeable traders on the planet. They know the playbook. They're buying physical commodities hand over fist. Now, we have seen greater acceptance around the world to a degree. Talk of a Bitcoin strategic account. What should be mentioned when we talk about that Bitcoin strategic account that was talked about at the Bitcoin meeting in Tennessee a few months back is what happened right after Trump got off stage. Well, it was Senator Cynthia Lummis who got up on stage, who has already floated a bill. Now, it doesn't have any backers, and it may not go anywhere, but I found it interesting that she is advocating for revaluing the gold held by the Federal Reserve on behalf of the Treasury to a level sufficient enough to take some of the profit or proceeds and buy Bitcoin for the strategic account, which mirrors exactly what, not exactly, but symbiotic at least, with the head of the Dutch National Bank, who has been calling for gold revaluation for quite some time. And I do believe gold will be revalued. I think it would benefit not only the central bank's balance sheet, but those of all of the central banks. And if you look at the amount of gold that has been accumulated by all the European central banks as a percentage of their GDP, it's like spot on the same with every one of them. And so it's as if they are preparing for some form of a gold revaluation, which falls in line with what I've believed for the last 4 years, that they will issue a new system tied to gold. Why else would the BIS reclassify gold as the only other tier 1 reserve asset? Why else would Kristalina Georgieva, the head of the IMF, say that a CBDC not pegged to something is fiat? Why else would the Brics payment settlement system called the unit be a 40% gold-backed plan? All of these things speak to gold having a role in the next system. And I think gold will be tied to the system, and Bitcoin could be a strategic asset. It will not be pegged to a currency. It's too volatile. But it could be a strategic asset. The moral of the story is the infighting between the two camps is as stupid as a mud wall. We should all be supportive of one another because they are symbiotic. They are, let's just simply say, I think both speaking the same language. It's just that one is more about making money and the other is about preserving it. But in the end, you walk in the door for the same reason, because the system is broken. So
analysts maintain a bullish stance on gold for the next 12 months and forecast the precious metal's price to reach $2,900 per ounce by the end of next year. They suggest a 5% allocation within a US dollar-based balanced portfolio to diversify. What role might gold revaluation play in shaping the global financial system, and how could it impact central banks' strategies? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.